Hello and good evening to everyone. My name is Zalis Amushahmi bin Ghazali. Today my team and I will be presenting Kawan Berhad financial analysis. Before we start presenting this work, I want to especially thanks to Ma'am Zakaria for letting us presenting this work. And why we create this slide? We create this slide is to reach our main goal. Our main goal of this study is to analyze and understand the financial performance of Kawan Berhad by using financial ratio based on PUO standard. This ratio help us measure the company performance in three important areas: profitability, liquidity, and efficient. By using this ratio, we can help get a clearer picture of how well the company is doing financially. By reaching the purpose, we want to help investors and stakeholders to better understand financial decision by understanding the company's strength and weakness to ratio analysis. We also want to make sure our report are simple and clear on Kawan Berhad performance, so they could understand very easily, even for those who are not expert in this finance. And in order to support this finance planning and decision making, we are giving useful information about the company ability to grow and success in the future. Moving on to company overview. To understand the company from financial perspective, we must start with the overall of the company. Kawan Berhad is a well-known company in Malaysia that operates in the frozen food industry. The company is famous for producing and selling a wide range of frozen food products such as frozen paratha, chapati, spring roll, bun, and many more. These products are popular in both local and international markets. There are three main focus areas. They are focused to improve its business and stay competitive. And one of it is product innovation. Product innovation is where the company always work to create create new and better food product. It try to meet the changing tastes and need of customer by improving the quality, flavor, and variety of frozen food. Moving to export, Kawan Berhad sell many of its products to other countries around the world. Exporting help the company grow its market and increase its income from international sales. And lastly, sustainability goal, where the company want to grow its business in the way that is good for the environment, society, and economy. This means using resources wisely, reducing waste, and making sure the company can success in the long term without harming the planet. After all of that, we shall check on financial ratio categories. There are four ratio. First are liquid ratio, efficient ratio, leverage ratio, and profitability ratio. Each of these ratio play a very important role in the company, also known as Kawan Berhad. First, we check on liquid ratio. When we look at liquid ratio, we can know how did the business pay its bill soon. This ratio help us understand if the Kawan Berhad have enough money or team that can quickly turn into cash, like stock or other money that customer own to pay its short-term debt. These ratio are very important because they show if the business Kawan Berhad can handle its day-to-day expense and pay the bill on time. And we will be moving on to efficient ratio. Efficient ratio is the business. We check if the business is using the staff well, how well the company uses its resource, like manage its resource, like stock with inventory, equipment, and money owned by customer. This ratio help us know if Kawan Berhad is managing its operation smoothly and not wasting resource. And we check on leverage ratio. On leverage ratio, we want to know how much does Kawan Berhad use its money or borrow its money. Leverage ratio tell us that Kawan Berhad money come from loan and other debt. This ratio help us see if Kawan Berhad is either borrowing too much money or using too much of it. This can end up risking that Kawan Berhad can end up paying back all of its debt, which make it a huge trouble. And lastly, profitability, where all company must check. Profitability is we want to know how much Kawan Berhad make its money. We want to check we will be checking its sale and other business activity to help to see the company how much they earn their money, and making sure that the ratio tell us that we are earning more money compared to spend the money. And from all of that, we can look at the ratio that Azrika will be explaining each of how they get the answer, comparing the ratio, and to look either the ratio is positive or negative. And I will be passing on Azrika to tell all of that.
So hi, Assalamualaikum. My name is Nur Azrika binti Muhammad Razali. My matrix number is 01 DPM 23F1089. So I will be explaining the efficiency ratios. So we get, for the inventory turnover, we get 5.63 times, and for the fixed asset turnover, we get 1.30 times. So the interpretation is it's very efficient inventory use and reasonable asset productivity. So the next one is leverage ratios. Leverage ratios, we get, for the debt ratios, we get 0.15, debt to equity 0.17, time interest earns 146.0. The interpretation is very low financial risk and strong interest coverage. So next, I will be explaining about profitability ratios. We have gross profit margin, which is 29%, and net profit margin is 10%. ROA is 7% and ROE is 8%. Interpretation for this: profitable with stable returns for shareholders. So for the liquidity ratios is current ratios is 4.34, and for the quick ratios is 3.58. The interpretation is strong liquidity can easily meet short-term obligations. So after observations of all the financial ratios, which is liquidity ratios, leverage ratios, efficiency ratios, profitability ratios, I find that all the ratios are not that safe, but also it can be so risk. So this company should have an improvement on their financial ratios. And then, but the most good ratios is liquidity ratios, efficiency ratios, and profitability ratios. For the leverage, it have to be improved to avoid risk. So next, I'll be passed to the Daniel to explain about the recommendation and overall analysis. Thank you.
Hello, my name is Muhammad Dihaka bin Isa. I will continue the presentation. So now we go to overall analysis. For liquidity, it is excellent. Kawan Berhad demonstrates strong liquidity, indicating that the company can comfortably meet its short-term obligation. A healthy current ratio and quick ratio suggests prudent financial management and a robust cash position. So for the second is efficiency. So for the efficiency, it's acceptable. While operation efficiency is satisfactory, there is room for improvement. Turnover ratio reflect moderate effectiveness in utilizing assets to generate revenue. Streamlining internal process and optimizing supply chain management could yield better efficiency. So now we go to leverage. The leverage is very low. The company maintained a very low debt to equity ratio. This showcasing conservative financing and minimal reliance on borrowed funds. This low leverage structure provides financial flexibility and reduce exposure to interest rate risk. So, now we go to profitability. The profitability is healthy and moderately consistent. Profit margins and return ratio are solid, indicating sound revenue generation and cost control. While profitability is generally stable, occasional fluctuation suggests potential benefit from refining margin management and expanding high maintenance product line. Hello. Okay, now we will go to recommendation. Our team have 4 recommendations for Kawan for Berhad. The first one is enhance cost control for better margins. By improving operational and production cost management, Kawan for Berhad can boost its profit margin and improve net income stability for the company. Okay, so for the second one is explore new market opportunities. Expanding into untapped domestic or international market, particularly those with growing demand for frozen and convenient food products, can drive revenue growth and reduce market concentration risk. In this way also, Kawan Food Berhad can maintain its popularity and its can make the company more stable in the market. Okay, the third one is invest in growth using low debt advantage. Being in the low debt has many advantages. One of it is the company can minimize reliance on debt position. It will to fund future expansion initiatives such as R&D, facility upgrade, or strategic partnership. It also can make the company to increase financially risk. Yes, it is. So, last one but not least is regularly monitor operational efficiency. Ongoing analysis of inventory turnover, receivable collection, and production output can highlight inefficiency. This also implementing lean practice and digital tools may result in more agile operation. Hello. So now we will go to the conclusion. The conclusion for Kawan Food Berhad is Kawan Food Berhad is a financially sound and low risk company with a solid track record of performance. Its strong liquidity and minimal debt provide a secure foundation for operation and future investment. While current efficiency and profitability level are inadequate, targeted improvement in this area can further strengthen the company's competitive position. With a proactive approach to cost control, market expansion, and operational enhancement, Kawan Food Berhad is positioned for sustained growth and long-term value creation for the shareholder. Okay, that's all from us. Thank you.